Right now, crypto feels quiet. Prices aren't exploding, altcoins aren't trending, and a lot of people are starting to lose interest. But here's the thing. Some of the biggest opportunities in markets don't show up when everything is exciting. They show up when things feel, well, uncertain. And if you zoom out just a little, what's happening right now looks very different from what most people think. Quick disclaimer, this video is for informational and educational purposes only. Nothing here is financial advice. Always do your own research before making investment decisions. Welcome to Ledger Pulse, where we break down what's actually happening in crypto, markets, and global finance without the noise. This channel is all about one thing, understanding where capital is moving before it becomes obvious. So if you want to stay ahead of these shifts, consider subscribing. Let's start with what most people are feeling right now, because if you've been watching the market recently, you've probably noticed the same things. Prices moving sideways, less excitement on social media, fewer "this coin is going to explode" posts, and more people questioning whether the cycle is over. And that feeling matters more than you might think, because markets aren't driven purely by data. They're driven by human behavior: fear, greed, uncertainty, and confidence. And right now, the dominant emotion is starting to shift back toward doubt. Data from Sentiment shows that Bitcoin is seeing one of the highest levels of bearish sentiment in months. Now, if you're new to investing, let's break down what that actually means. Bearish sentiment simply means more people expect prices to go down than up. You'll see it in social media posts, comment sections, news headlines, even conversations between investors. And here's where things get interesting. Markets don't usually reward the majority opinion. They tend to move against it. Think of it like this. If everyone already believes prices are going lower, a lot of selling has already happened. And once that selling pressure slows down, it doesn't take much demand to push prices higher. That's why extreme fear has historically shown up near market bottoms, not tops. Now let's talk about altcoins, because this is another major signal. According to recent data, over 40% of altcoins are sitting near all-time lows. At first glance, that sounds incredibly bearish, and emotionally, it feels that way too. But here's the key insight. Markets don't stay at extremes forever. When assets are pushed this far down, one of two things usually happens. They continue collapsing due to structural failure, or they begin a reversion phase, where prices move back toward fair value. And historically, these types of extreme conditions have often shown up during late-stage corrections, not early ones. Now let's go deeper, because price and sentiment only tell part of the story. To really understand what's happening, we need to look at on-chain data. On-chain data tracks what's actually happening on the blockchain, things like transactions, fees, wallet activity, and network usage. It's like looking at the internal health of the system, not just the price. Data from Glassnode shows that Bitcoin transaction fees have dropped to extremely low levels, the lowest since 2011. Now you might hear that and think, isn't that bad? Lower fees, less demand, right? Yes and no. Lower fees do mean less immediate activity, but they also tell us something important. The market is not overheated. There's no frenzy, no extreme congestion, no speculative mania. And historically, those quiet periods have often been where long-term positions are built. Now let's compare retail sentiment to what experienced investors are saying, because this is where the contrast becomes clear. Tom Lee recently stated that the market is likely 90 to 95% through the sell-off, and he would be buying at these levels. Now let's simplify that. He's not saying the market instantly goes up. He's saying most of the downside has likely already happened. His reasoning is based on economic resilience, strong underlying fundamentals, and the fact that inflation-adjusted prices are still below previous peaks. This is important because it shows how experienced investors think differently. They don't chase excitement. They look for asymmetry. Limited downside with significant upside potential. Now let's shift to something even more important: regulation. because this is one of the biggest factors shaping the future of crypto. The U.S. Securities and Exchange Commission has approved the listing of options on crypto-related investment products on the New York Stock Exchange. It allows institutional investors to hedge positions, manage risk, and participate more actively. At the same time, eToro has launched crypto trading in New York. New York is one of the strictest regulatory environments in the world, so when a company gets approval there, it signals progress. Now let's talk about one of the biggest long-term trends, tokenization. Tokenization means turning real-world assets like stocks, bonds, or real estate into digital tokens on a blockchain. Why does this matter? Because it changes everything about how assets move. Faster settlement, lower costs, global access, and 24/7 trading. Now, zoom out globally. We see here from Watcher Guru that Iran is pushing for trade payments through the Strait of Hormuz to be made in crypto or alternative currencies. This isn't just about crypto. This is about global trade, currency power, and financial sovereignty. So when countries start experimenting with alternative settlement systems, that's when things begin to shift at a structural level. If this breakdown is helping you to see what's happening beneath the surface, make sure you're subscribed, because most people don't miss opportunities by being late, they miss them by not recognizing the shift early. So let's connect all the signals. Sentiment is turning bearish, altcoins are at extreme lows, on-chain activity is quiet, institutions are expanding access, regulation is evolving, and global systems are experimenting. That combination doesn't usually happen at the top. It happens during transition phases. Markets move in cycles. Hype, disinterest, accumulation, expansion, and right now, we're somewhere between disinterest and accumulation, which historically has been where the biggest opportunities are quietly built. At the end of the day, this isn't just about crypto. It's about the evolution of the financial system itself, and the biggest shifts don't happen when everyone is watching. They happen when most people are looking away. If you want to stay ahead of that curve, subscribe to Ledger Pulse, because we don't just follow the market, we track where it's going next. If you found value in today's video, hit the like button and let me know in the comments below. Do you see this as crypto finally going mainstream, or the moment traditional finance starts reshaping it into something completely different? I'll see you in the next one.